Hi everybody, welcome back to Smart Money Academy. And today, man, we are talking about FVGs. We are finally talking about some actual things that, like, not like psychology, nothing crazy yet, but actually something that I personally use every single day, which is the fair value gap. Okay, so let's get straight into it. What's a fair value gap? Okay. We talked about it a little bit in the live this morning. So a fair value gap is one candle. Oh, sorry about that. One candle like this, another candle like this, and then another candle like this. Okay, it's made up of three candles. Okay, and then this is the wick of each candle, and then it's important to understand that a fair value gap needs three candles, and it also needs displacement. Okay, because a fair value gap with no displacement doesn't really mean much to me, but that's for later in this video. We're just gonna start with this here. So this here, where is the fair value gap? It's in between the top of the wick of the first candle and the bottom of the wick of the third candle, if they do not touch. Meaning that let me take all this out. Let's say I was to go here, right? I have them all marked out in red here. So first candle, second candle, third candle. FVG right here. Okay, in red. Easy to see, plain, simple. So far, should be fairly simple, right? You can go in your own charts, you could find them, you could look at them, you could get an indicator like me that highlights them super quickly and super fast, just like this, right? So once we figured out that this is an FVG, it's important to understand that there's going to be a lot of FVG on the chart, and not like all of them are actually relevant. You need a narrative, okay? So let's say you have a market that's like this, right? And then it goes like this, and then it goes like this, and then it goes like this, okay? So let's say we're like this, okay? This is what the market's doing right now, right? We have our displacement here, and there's an FVG here, let's say, right? This would be a really good place to enter to target those longs here. Now, there's going to be FVGs all the way here and here probably. But this right here with the narrative of the displacement and the return here and the triple or double highs here of buy side liquidity makes this a high probability fair value gap. Okay? Now, it's important to understand this because I don't want you guys putting your limits orders into every fair value gaps and getting stopped out of everything. There's also time frame difference between the fair value gap. Okay, so a daily fair value gap we could use is draw on liquidity. Right, we've learned about those. So let's say this fair value gap here, we could say, okay, I think the market's going to be going here. Right. Okay. Once that's done, you don't want to use, we're intraday traders. We do not use the daily fair value gaps or the 4 hour fair value gaps as entries, okay? We use them as possible draws on liquidity if indicated, if there's displacement towards it, if we can build a narrative around it, okay? If there's a reason to get there. If there's no reason to get there, there's no reason to even think about taking a trade in the first place, okay? So what I'm usually interested in is 15 minutes, 5 minutes, 1 minute, 15 seconds as well, and sometimes the hourly fair value gaps. Let me give you guys another example. Um, let's say you have this here, okay? I'm gonna make this semi-simple here, but let's say you have this, okay? Now, um, how do I put this? You have an FVG here, okay, from like previous structure. It reacts from it bearish, okay, and the displacement is there. Now you say, okay, I think this is a market structure shift here. Actually, I should have done it like this. Hold on. Can I modify this? There you go. Like this, and then this was coming like this. Okay. So you say, okay, there's my market structure shift here that we talked about, right? And there's displacement here in this candle. This candle here has displacement. Okay? I'm gonna highlight that in another color so it's easier. Yeah, this is the displacement candle right here. Okay? Once that's identified and there's an FVG here, you if you enter here and your first target is here, your RR, which is your risk, is going to be skewed. It's not good. Okay? You don't want to be doing that, especially if it's here. This is not the trades you want to be taking, and this is lower probability. Okay? You wait for the retracement, and then you wait for the reaction. Okay? This is going to be learned in further lessons, but you want to wait for the market to tell you that the fair value gap is working. It's not going to get ran through. Okay? You want to wait for a wick rejection, which means that the body closed below the fair value gap and it's just a wick that's inside the fair value gap. That's a really good sign of a rejection, right? And this is again for fair value gaps on the 15, the 5, the 1, the 15 seconds, whatever it is. We're gonna this. I'm not giving you a model right now. Do not go into the charts and apply this. I just want you to look how the candles print when you go into your own charts on demo or something, right? And you look at it. In further lessons, we're gonna discuss how exactly to do all of this. But for now, you just look and you say, okay, this is rejecting nicely. Let's say, let me try to find one that's easy enough. Let's say this here, okay? It's exactly what I drew here. We were going up, big displacement down right here, okay? We return, we wick this fair value gap here, 1, 2, 3, 4 times, okay? This tells me that we don't want to go higher, and then bang, what do we get here? Displacement down, okay? So, and then that created another. I'm not sure where. Oh, this is the overlap. Okay, so there's an FVG here and there's an FVG here, and then this one here got revisited again as well. Okay, so what I'm trying to say here is you want to wait for your rejection to make sure. And look, every time we bounce out of it, it's just big displacement down. Okay. Um. Other than that, it's really, 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 really important to stack your confluences when it comes to fair value gaps. You don't just take a trade off a fair value gap. It's like I said, if the market's looking like this and you want to take a short off of this, you have to make sure that the overall trend was bearish. It's overall bearish, a slight retracement, and then you get your confirmations that we're going back bearish, okay? Which means that you need a trend, a daily trend, okay? The trend here is bearish, and there's a bearish fair value gap here. I'm gonna look how this reacts before taking a trade. Drop down to the 4 hour. 4 hours bearish. This here is another bearish fair value gap. I'm gonna wait to see how this reacts before taking a trade. Drop down. Okay, okay. Oh, and then all their time frames are going to align. And then on the lower time frame, when you get your FVG and your market structure shift and your displacement, then you know you're ready for a continuation move. And you could take big trades, right? That's the whole goal around this, is to add another building block to your trading plan. Okay, you want to make sure that you have a displacement towards your drawn liquidity, and if you can get the return to the fair value gap, it's going to give you a better RR, a better probability trade, because you're going to be confident that your trade is going in the right direction if it rejects from the fair value gap, okay? And it's just going to be more it's just better, probably better win rate on your trades too, simply because you're going to get that extra confirmation. Okay. It's also important to understand that FVGs in chop is not going to work like here. Okay, this is accumulation. When we're accumulating, the market's either going up, down, or accumulating. When it's accumulating, all these FVGs are good for nothing. Okay, they're all bad, they all won't work, and they're all not what you want. You don't use this. You use the FVGs when you have a direction, a trend, a drawn liquidity that you're confident in, and an area in which you would be willing to take the trade. Meaning, here in this chop fest, okay, you don't know when you're here, you don't know if this market wants to go all the way down here and take out all this, or go up here and take out all this, okay? So, what I mean is, once we take this significant high here, and we take it again, and we start chopping, and we open higher, right? You don't want to look for shorts here. Here maybe, but in this, you don't want to look for shorts in this, because we're right out of accumulation. Now, when you're looking at this here, and this is a market that wants to go down, there's no chop, there's no nothing, okay? You look here, you get your retrace here, bang, taps the FVG, gone. Okay, and I'm cherry picking here, but it's really how it is though. Like the market's going down. Okay, market opens right here, right? The FVG is here. It's still valid. Goes in it, dips. This one here did not quite get in it, but it actually hit it right here. But this is not where we trade, so this doesn't count. Okay. You want to here is exactly what you don't want to do. You have an FVG right here. Okay. It's right here. Market hits your FVG. You get in. Nope, that's not what I meant to do. Yeah, this one right here. This is the one right here, and then your stop would be here. So you get in this trade, spread would have stopped me out here, so I'm just gonna move the stop down. FVG here when the market opens, because that's just how it is. Market opens, this FVG here will be marked out. Trade goes in, perfect. You want to wait. You see how this candle closed above, negating the FVG? This is no good anymore. You do not use this FVG. It's a candle closed above it. When it's bearish, FVG is no good anymore. Okay, it has to wick. If there's a candle closure above or below it, depending on if we're bearish or bullish, the FVG is no good anymore. Which means that once you get this displacement here, this displacement down, this FVG here is the new king. And this is the one that gets wicked out perfectly. Do you see this wick? This is good. You take the trade here when the wick rejects, you can set SL here, and you can get a big RR trade. And like a 1 to, well, realistically it would be here, so it's a 1 to 3, right? And this would hit TP. And yeah, that's pretty much how you would go about dealing with FVGs. I'm gonna say it again though, not every FVG is right. You have to make sure you have your narrative, you have a drawn liquidity, you have a trend, you have a pullback, and you have a reaction from it. Okay, these are the 5 really important concept to grasp on the FVG. I need you to write them down. I need you to understand them. I need you to go into your charts and see how it's reacting and see if you can identify high probability gaps and then look how they react from it. Okay. When you have a thing like this, I'm gonna teach you to get this in another video. But you can also look at premium discount zones, which I'm gonna go over in another video. So write down premium discount question mark if you're looking to, if you want to wait, and the video is going to come out in a few days and you can watch it. If you're watching this in a few days or a few weeks after I posted this, then you're good. You can just go watch that video after and you're going to see exactly what I'm talking about. It's just an extra confluence on top of your fair value gap. Alright, so with that being said, guys, I think that covers the fair value gap. And just so you guys know, I'm still live every morning on Twitch. I do the challenge for the $100,000 to $50,000 still. I'm up 128%. I did not take a trade today because we're on Monday with no news. Other than that, I'm JD. And yeah, if you guys want to subscribe, like, comment, ring the bell for when I pop a new video. Follow me on Twitch. Watch me live. You can join my Discord. You can follow me on Instagram. You can follow me on TikTok. I'm on all those platforms. I post almost every day. And I'm going to keep posting those Smart Money Academy. So make sure you don't miss any. And I'll catch you guys in the next one. Peace.